Have you ever heard of LendingTree? Well, what if there was a sort of LendingTree for doctor owners who need to get a loan? And my guest today has started one such service and he's here to tell us a bit more about it. I'm Carl White, principal at Market Advisory Group, which is a healthcare marketing agency, and I'm also the host of Practice Care. The mission for both is the same, and that's to help private practice owners stay private. In my opinion, care is better when the doctor owns the place and has the most clinical freedom to make the decisions they think are best. And my guest today is Victor Holloway, and Victor's bio, here it is in his own words. I'm married to a dentist. I remember what my wife Carmen and I went through together as she was pursuing her goal of launching and building her practice. I remember the constant uncertainty when dealing with banks, the skepticism from lenders, and yes, the denials as well. It was frustrating, emotionally draining, and heartbreaking. We persevered, and today Carmen leads and operates a successful dental practice in Charlotte, North Carolina. However, it was that experience that led me first to start the Medicus Group in 2008 and then go on to co-found LenDRgroup Consulting, that's LenDR Group Consulting, in 2019. And this year in 2023 is when I transitioned to LenDRgroup full-time to serve as its CFO. Victor, thank you for coming on Practice Care and making us aware of what's going on.
Thanks, Carl. Thanks for having me.
So I want to start before we get into LenDRgroup with kind of like, the relationship of the lender or the banker with, in this case, the doctor, the owner, the person who's trying to get the loan, right? Because we've had a couple of other episodes where bankers have come on as guests and they've all said the same thing. Call us earlier, develop that relationship. The more we know, the better. And you're here saying the same thing. So reinforce it. Why is that relationship so vital?
Well, I think where I would start with that question, Carl, is typically whether you're an independent dentist, physician, or veterinarian, they're all trained to ask bankers one question: what's my interest rate?
Yeah.
So where
That's not
we
just them,
step
by the way. I'm kind of guilty of that too. So yeah.
I think most Americans or
Yeah.
most consumers that deal with
What's it
banks, that's what
cost? Yeah.
yeah, right. That's what we're concerned about, is what it actually costs. But we step in and we educate, and we do a very good job of articulating to that independent dentist, physician, and veterinarian that it's so much more than interest rate when determining what's the right lender to place your loan with. We get involved and we ask a lot of questions in regards to what's your purpose for the loan? Are you someone that just plans on owning one location? Are you interested in being more of an entrepreneurial healthcare practitioner? So once we kind of go through our due diligence and our checklist, that gives us the ability to better advocate on their behalf with banks. We have a lot of clients as well as banks that say what we do better than anything else
Hey,
is we
Victor.
humanize. Yes.
Oh, I'm going to see if we can do this one again. Only because the question is, why is the relationship with the lender so important? And so you
Okay.
started there with I think where you're starting to go is, correct me if I'm wrong. Everybody asks about the interest rate, but it's a lot more than that. There's the fit with a lender is more than that. The question after that is, all right, let's get into LenDRgroup Consulting, which is where you could
Okay.
talk about
Got it.
everything you were about to. Does that make sense?
Got it. Okay. So yeah,
Okay.
let's go back and what was okay. Ask me the original question again.
Yeah. So, well, before we start again, is why is the relationship with the lender so important for doctors? And then you said, they know one question to ask, it's the interest rate. So stay on that one, and then answer that one, and then the next question after that is, so let's get into LenDRgroup Consulting. Why did you start it?
Okay. Got it.
If I just build a good relationship with my banker, where do you guys come in so many words?
Okay. Got it.
So I'm going to go back to Victor. Thanks for coming on Practice Care, and then we'll just kind of flow right in from there.
Okay.
All right, cool. Thank you for that. Okay, pregnant pause. Victor, thanks for taking some time to come on Practice Care.
Carl, thanks for having me.
Yeah, absolutely. So before we get into LenDRgroup Consulting itself, I want to start with, the idea of the relationship that any, doctor owner has with their lender. It's important. In fact, you're not the first one to suggest it. When we talked beforehand, you said so. We've had a couple of other episodes, each with a banker who said the same thing. Get to know us earlier. The more we know, the better. And you're saying the same thing. So why is the relationship with the lender so important just generally?
I think the relationship with the lender is very important because, if all right, let's start over again. Now I'm getting my
Okay.
words. Sorry.
Okay.
Because I think the problem that I'm having, so when I looked at the questions again that our CMO gave me,
Mhm.
you hit on, I was like, so many of these questions will get answered previously. So trying to stay within a pocket or a lane
Yeah.
is what I need to do. I think maybe I shouldn't start with the interest rate part of it, because the second question, I think me talking about working with clients to understand that the bank you choose is much, it's not just about interest rates. So I might need to answer this question differently.
Well, let me ask you this. So, I mean, I'm looking at the first question that was sent to me just in the order of question was, why did you start LenDRgroup Consulting? If I start there, does that help?
Yeah, that probably helps better with starting there.
Okay. Do you want me to go in the order that the questions were given?
So I have them pulled up
So I've got, why'd you start
here.
LenDRgroup? The next one is, how'd you decide what services to offer? The next one is, why is the relationship with the lender so important?
Okay, yeah, maybe that probably will help me by going there.
Okay.
Because how I would want to answer this without having to think, it's easier for me to flow through it this way.
Sure. Okay. That's cool. I can do
Okay,
that.
we're
Yeah.
good.
Okay.
Sorry.
No, don't worry about it. All right. We're going to go back to the beginning. Okay. Victor, thanks for taking some time to come on to Practice Care.
Carl, thanks for having me on.
Yeah, absolutely. All right. So let's get into it. Let's talk a bit about LenDRgroup Consulting first. Why'd you start it? It's easy. I mean, there's a trillion bankers out there. Like what, tell us a bit about this.
So it all goes back to what you mentioned about my wife, meeting my wife fresh out of dental school when she was going into residency. My
Mhm.
living room at that time, and still to today, is filled with a lot of dentists, physicians, and veterinarians. And notice that they all, when it came to talking about the process of lending,
Mhm.
it was something they were very intimidated by, frustrated by, and if I'm being honest, somewhat distrusting of banks. So my initial reason for starting it really was just to act as an advocate for independent dentists, physicians, and veterinarians. And the deeper I got into it, I understand that they only knew one question to ask banks: what's my interest rate?
Right.
So
They have good company there. Kind of guilty of that one too.
it became me and my partner's mission to educate them on that obtaining a loan it's so much more and it entails so much more than just
Right.
knowing what your interest rate will be. Educating them on things like prepayment penalties, getting them to understand that they need to have a good understanding of what direction do they want to take their career in. If you're looking to be a multi-practice owner versus what I would term is just a mom and pop owner where you only own one location.
Right.
Well, the bank that's good for the multi-practice owner and the bank that's good for just one location owner, they're probably not the same bank. So really
Interesting.
the genesis of all of this was just really to act as an advocate on behalf again of independent dentists, physicians, and veterinarians. And within that process, offering them more of a concierge approach to obtaining practice financing. And what I mean by that is we complete all the applications for them. We handle all the emails and phone calls with the underwriters. We schedule the closings on their behalf. We package everything for them. Along the way, along the way, educating them on what's going on behind the scenes.
So give us an example of that, because um, so you step, is it that you LenDRgroup Consulting kind of steps in between the doctor owner and the bank? You help them choose the bank, like help
That's a
us help
great
us understand
question.
it.
That's a great question. And I wish I could say, I could put a nice little package around this, but it all depends on when the doctor chooses to engage us. To your point, some of them come and they strictly want us to be the lending tree of the process and bring multiple offers. Some
Okay.
have already engaged the bank and it's not going well. We have doctors that say, hey, you guys speak bank and we don't.
Right.
um, Now, the other side of this, not to get off track, we also get banks that call that already have clients and they want us to work with the client because they feel that we have a better process in place of getting clients to closing. So we get clients at a wide array of stages.
Hmm.
If I had to put a percentage on why the majority of doctors reach out to us, they're very intelligent. They have great credit, great liquidity. They're just too busy to get involved with the process. So they enjoy the hand holding and the concierge approach to us completing the application. I don't know about you, but I never get excited about filling out
Yeah.
applications, particularly loan applications that, I mean, Lord knows between the pages you have to complete and the documents you gather. I mean, none of that's exciting. They can't do it during traditional business hours because they're seeing patients.
Yeah.
So part of the value we offer, we give them time back with their family. So if I had to put a percentage on it, that probably would be 60% of the people that call us. They're just too busy and they want someone to take it off of their plate, but at the same time, they want someone to act as an advocate on their behalf. And because we're not a bank and we have at this point 500 banks on the platform, we're not
Wow.
married to any one bank. We just want what's best for the client. So we get a lot of doctors that call, and although they like their current bank, they understand in order for them to do the deal with their bank has to paint a picture to make them believe that their bank is the best bank to work with. And
Hmm.
that isn't necessarily always true. So they like that we're independent and whatever recommendation we give them, it has nothing to do with, hey, if you don't do this deal with me, I don't have a mechanism of making money off of this financing deal.
Hmm. So what's the desire? Is for you, is the best use of LenDRgroup Consulting at the, I should engage you at the very beginning, or it's better, or it doesn't matter if I get halfway there and it just becomes really frustrating and then I call you and you come kind of rescue it? Do you-
That's a great question. We prefer to be involved at the beginning because a lot of times when they call, and I love the term that you use, frustrating, it becomes frustrating for them, us, as well as the bank. Because when they call us midstream, a lot of times we're having to undo things that have been said to underwriters that underwriters can't forget. So
Mhm.
now we're having to overcome some obstacles because sometimes on their own, if we're being honest with you, they found the right bank, but it's kind of gone off the guardrails because the interview with the chief underwriter hasn't gone well. So we get in and we have to kind of either pull it all back together with that existing bank or move on to a new bank. So it's better just to get us involved earlier and then we can find the right bank. We have about a 96% success rate that when we say this is the right bank to engage, that they're actually going to approve that deal.
Okay. And I want to go back to something you said earlier, that the theme of what you said was, the bank that you're with for whatever reason today might not be the best bank to give you a loan, to fund that loan that you're looking for. Um, do How do you determine that? Like, how do you look through your platform of 500 banks and go, these four are really the best for you? because? How do you do that?
Uh,
Not like in detail, but like how do you do that?
that's probably the most challenging part of what we do, because that requires constant engagement with all the banks to determine updates in their underwriting process. Um, Not to get too technical, a lot of loans get declined not because it's a bad loan, it's portfolio based. The bank has recently gone through an audit of their portfolio, and someone will say, until we sell off X number of our startup loans, we can't do any more startup
Right.
loans. So literally, it could have been a bank that 3 weeks ago we took literally the same deal, different doctor, and it flew through credit, approved, we're closing, and they call back and they say, forgot to call you guys. We just had an audit a week ago, and we're a little bit too top heavy in our portfolio with these types of loans. So right now we can't do this type of loan. So
Right.
it requires just a lot of engagement. But if I'm being honest with you, we have an algorithm that does a lot of the work, but we never want to remove the human element, because a lot of times the algorithm will say, hey, take the deal to Carl's bank.
Mhm.
But we know that the customer service at Carl's Bank is horrible, or Carl's Bank just lost a great processor that we had a great relationship with that turned deals around very fast. So there's still a human
Yeah.
component too. And a lot of that's predicated on the customer service aspect. So when the algorithm whittles the 500 down to here's your top five, then
Mhm.
that's when the human element steps in and says, but who's going to turn it around fastest?
Mhm. Fair enough. Okay. Um, and the services that you guys offer, you kind of talked about it a bit, and you talked about both sides, on the, let's say on the consumer side and on the bank as a customer side. On the consumer side, just to make sure that we've kind of checked the box, what are the services that, not the consumer, like the doctor owner, um,
Oh,
that you offer them? Yeah.
right. So obviously, outside of, as I mentioned before, it's we complete all the applications, we fill the emails, we do all the interviews um, for them. When it comes to closing, if they don't have a closing attorney, we will line that up. If they need appraisals, we can handle all of that. Now, when you get specific about what we're helping them with, it's anything that a bank would do. It's refinancing, partnership buy-ins or buyouts, equipment financing, anything they need financing oriented for their business. We don't get involved in any personal products like mortgages,
Right.
personal lines of credit. We help with business lines of credit, but nothing on the personal side. It's all 100% business slash practice oriented in regards to the financing we assist with.
Got it. Okay. And I have to ask you, so we are recording this episode in the midst of the Silicon Valley Bank failure and sort of you know, the country looking around at banks and going, wonder, it seems like it's starting to stabilize. But has that rippled through, not to you guys personally, but does that, are you seeing some, not name any names, but I'm just wondering if that's made it to your desk as, wow, we have to factor this in as for the loans that we're looking to close.
You know what's ironic, and it's part of the reason I've chosen to stay in this niche. You know, when banks look at their portfolios, the joke that they say is, even when dentists, physicians, and veterinarians work at trying to fail, the practices still never go under. So a lot of times what will happen, there will be lending restrictions put on, for lack of a better term, small business lending, and they will exclude practice financing, because I mean the
Yeah.
percentages, man, it's 0.0000. I
Yeah.
mean,
Yeah.
they really have to work at failing, and typically it will be because of a death. And typically the insurance is the bank has collateralized that loan with life insurance, a premature disability, but a lot of them, again, will collateralize with disability insurance, or just an unexpected death. And the spouse is just so overwhelmed with grief, they don't take the time to sell the practice in a timely fashion.
Hmm.
So, if I'm being honest with you, over the past 2 weeks, our business has doubled in
Really?
regards to the calls we normally receive in a week. And that's from the end user, the dentist, physician, and veterinarian, as well as the bankers, because some credit boxes have gotten a little tighter. So they're like, hey, you guys got 500 banks on your platform. I know someone can do
Yeah.
this deal. Because again,
They
we're
can't all
not
be
doing,
bad. Yeah.
correct, we're not doing deals for people that are credit challenged. And that's not saying that if someone doesn't have credit challenges, they shouldn't call. As long as we can make sense out of the story, we can potentially get the deal funded.
Hmm.
But again, people are calling because they're like, hey, typically I would have embarked on this on my own, but I know more than likely the first couple of banks, and this is said to me yesterday, that I'm going to choose are probably going to decline this loan. So rather than going through the process of calling you guys 6 weeks from now, I just figured I would just call you now.
Yeah.
So between the banks calling and the end users calling, business has really just exploded over the past couple of weeks.
Interesting. When you say it, it makes sense, right? Because you've got, again, they can't all be bad on the platform. So where are some safe havens? It makes sense.
And
Um,
and and you also have people that have business models that they've been fighting to get market share, and they haven't been able to really penetrate this healthcare financing market the way that they would like. And they see this as a huge opportunity.
mhm.
Whereas some people are retracting, they're like, let's expand our credit box and try to gobble up some market share and brand recognition, while some of our competitors that we've been losing deals to are not lending to the level that they were lending to.
Yeah.
So there's a lot of banks that see it as opportunity, and some of them that are saying we're not closing up shop, but we want, the cream of the crop.
Yeah. That makes sense. That makes sense. Um, so Victor, I feel like we have just scratched the surface on the topic on LenDRgroup Consulting, but here in Practice Care, which is bite-sized episodes, I have to kind of bring it to the finish line. Let me start with, um, is there anything you think I should have asked you for kind of like the introductory level of information that we've talked about? Anything you think I should have asked you, but just didn't, that you think our listeners need to know about?
Um, and I guess because this is fresh on my mind, because
Hmm.
we speak at a lot of residency and fellowship programs, those individuals always ask, how soon should they start the practice financing process, even if they don't have a practice that they've identified. And I always preach to them that it's never too early to start the practice financing process, to make sure you're positioning yourself to be a good lendable candidate. Because these individuals, they're not kids, but they go out here and they're tired of living like a student, and they come out of school and they buy a house that's too expensive, or a car, or
Yeah.
student loans aren't being managed properly. So when they find that practice, or they're being offered a partnership opportunity, so often those deals do get delayed, because then we have to bring someone in to help them kind of restructure their credit so their
Hmm.
income to debt ratio falls in line. So I like to get them very early, to put them on a roadmap of, hey, if you're making $300,000 a year, your mortgage shouldn't be more than this a month. Your car
Hmm.
note shouldn't be more than this a month. You should be saving this amount of money. Now, if you're not very liquid, and an underwriter can see that you're maxing out your 401k, you have the appropriate insurances and things of that nature, maybe you're making some extra payments on your student loans,
Right.
there's a story behind where the money has gone. Or maybe there's a big ticket for you to move across country because you went to dental school or medical school in Los Angeles and you relocated to New York. But
Right.
there has to be a story. And so often when they're engaging with banks on their own, they don't know how to paint the proper picture for the underwriter to understand I'm not horrible with my money, but here's where the money has went. So they get some credit for some ad backs.
Right. Right. That makes sense. That makes sense. Okay. And the other question I asked to wrap it up is somebody, to our listeners, we've caught somebody's attention and they want to get going down this path. What are the one or two pieces of advice you'd give them so that they could start going down this path as soon as they're done listening?
So the best advice I would give them, and I'm not anti-bank because banks are our partners and we love working with banks. But what I try to caution any business owner on is negotiating with banks on your own. You're already behind the eight ball because they have high-powered lawyers. And trust me, any contract or agreement that a bank puts in front of you, it's going to be skewed to their benefit. So you want someone in the middle, not creating an adversarial relationship. That's not what we want with the bank because we still need their money. But you also want someone there that can point out the risk of, hey, if you put your signature on this, you understand how this prepayment penalty works. If you put your signature on this, you understand that if your income to debt ratio goes above this threshold, they can raise your interest rate or they can call the loan. Because, people are so excited, Carl, to get approved. It's just, where do I sign?
Yeah.
And then something happens 2 years down the line and they're like, what is this letter about that I'm receiving from the bank? At that point, it's too late. More than likely, they're going to put you in the special assets group and look to move your loan, call your loan. And I mean, these are worst case scenarios, but you still need to be aware of what you're signing up for. And typically what we see is with that individual that wants to be a multi-practice owner, they didn't realize that the initial bank that they started with is going to delay their journey in getting to multi-practice ownership, predicated on what the prepayment penalties look like, some loan covenants and things of that nature. So that's, again, another service that we provide. If they're truly committed to being in that arena, like, hey, here's some banks that we want to start with. And sometimes those banks, the interest rates are a little higher, and we're honest with clients about that, but it's going to make their journey much easier to multi-practice ownership.
And that has some value. It's true. Excellent. Well, Victor, thank you for coming on and sharing some background and some info on the wonderful world of banking and LenDRgroup Consulting. I really appreciate it. It was great to have you on.
Thanks, Carl. I enjoyed it.
Yeah. Once again, Victor Holloway is with LenDRgroup Consulting. That's LenDRgroup Consulting. We're going to put all the contact information, Victor, that you gave to me into the show notes for your episode. And a couple of other points before we wrap up. First, if you're someone like Victor or I and you service private practices and you've got some experience that you think would benefit private practice owners, or if you're a private practice owner yourself and you also have some experience you think others would benefit from, we want you to come on Practice Care and tell everyone about it. In the episode, show notes for Victor's episode and all the episodes, there's a link. Click on it, a couple of questions, tell us what's on your mind so that we can get you scheduled as soon as possible. And finally, if you haven't done so already, please subscribe to Practice Care on Apple Podcasts or wherever you listen to your podcasts. Thanks very much. And until next time.